Good afternoon. This is Tom Alexander. It is Sunday, June 26th, and this is the video addendum to the written report that all of you should have received. If you are not receiving the report, send me an email to tom@alexandertrading.com and I'll put you on the list. Okay, lot to discuss. Let's start with this view. These are the four primary U.S. trading indices: the S&P, the Russell, the Index, and the Dow. Now, from a weekly perspective, the levels you see on the screen, all four indices, all four of the primary U.S. indices need to close above these levels to give any sort of hope that, at least immediate hope, that we have restored the bullish trend and would increase it. That would be the thing that would increase the probability that this has just been a correction. It's not a bear market, and there is hope for new all-time highs in one or more of the indices. I guess I better show my screen, which would be helpful. Now, a little better. So here are the four indices: Russell, S&P, Dow, and Index, the cash indices. The levels you see here, and these levels are in the report, to the upside, all four of the indices need to close above these levels to restore an intermediate to long-term bullish outlook. That would not confirm an intermediate to long-term bullish outlook, but it would be a step in the right direction. To the downside, it's going to be the recent lows. That's just the bottom line. Now let's go down in time frame a little bit, and we'll take a look at. All right, now there's several points to be made here. One thing I want to point out is the divergence that we highlighted in last weekend's report, and at the time we pointed out that was potentially bullish. And that turned out to be the case. The other thing that I'll point out, and then this was also mentioned in the report last weekend, coming into last week, we had this washout waterfall type of decline. We had gap, gap, and gap. Now, we were not getting the huge spike in VIX. I think a lot of people were looking for that. I think a lot of people got caught offside because that didn't occur. But this is a wonderful example of why you want to always default to price action. There are all these other things out there, but we're trading price. And if there is some indicator, whether it's typically causative or it's highly correlated, if price action isn't confirming it, that's the default. You default back to price action. And it keeps you from getting stuck in trading a narrative. Well, I'm bearish because of this, I'm bearish because of that. And on the other hand, you don't want to get stuck in a bullish narrative either. You don't want to trade a narrative. You want to trade opportunity. And the best way to do that is to understand how markets develop. All markets develop following an auction market process. And that's where we are. So, to cut to the quick about what should happen next week, we had a lot of momentum last Friday. All four of the indices are in lockstep. That's a sign of institutional participation. So there should be some upside follow through. Now, there are all sorts of gaps that could be filled. There's no magic to that. That's a whole nother topic, but there's a lot of upside momentum on Friday. I'll be real interested to see some follow through. There should be some follow through this week. And to the downside, the level to keep an eye on would be Thursday's low. If Thursday's low comes out in all four of the indices, then that's a signal that this bottom could be tested or even taken out by one or more of the indices. But for now, I would have an overall bullish orientation to this market. The levels you see on my screen to the upside are the best levels best guess levels that this market could trade into. If they trade straight up into these levels, these are levels from where you're likely to get some sort of pushback. I don't have one marked in the Russell because it was just almost straight up and then straight down. But that's okay because we have similar levels among the S&P, the Dow, and the NDX, which we will be watching extremely closely. Let's take a look at the profile view. Now, I invite you to follow along. Each week I try to put in the report, the written report, the possible pattern of development that the S&P is likely to follow. And it's uncanny how it follows that roadmap. And this is just a guess as to how the underlying pattern will develop. But if you understand auction market principles, it's a very educated guess. And if you learn auction market principles, you're going to be right more often than you're going to be wrong. So it was coming into this week, it was unlikely that we were just going to wash out to the downside completely. And indeed, we're getting a bounce. Now, there are, if you're looking at this chart, there are a number of possibilities here. We could go down and test the lows. We could build balance in here. We could, the low could be in place and we could eventually trade all the way back up into the 4170, 70, 80 area. So we shall see. Okay, let's take a look at the technical perspective. And this is a chart I include in the report every week, and it's pretty simple stuff. The red is a moving average of NYSE advancing issues. The green is a 5-day, the red is a 10-day moving average. The green is a 5-day moving average of NYSE advancing issues. And the blue histogram is breadth. It's the net NYSE advances minus decliners. Now, we've had this furious rally, but we haven't had this relentless day after day positive breath that is inevitable at some point in time. So we shall see next week what happens. Now, and this is just an aside, and I don't want to get too far out there with speculation at this point, but if we were to have some surprising selling next week and breadth reach down into the negative 2000 area under a bullish assumption, that should be a great buy opportunity. That's something we'll cover live in the live trade room, by the way. Now, another technical aspect that I want to highlight, and this is something we've been following very closely for several weeks. This is VIX, the volatility index, and we have been diverging really for months against this low. As the market has gone lower, VIX has made lower highs. And I think this was a big hook that caught a lot of people. And at this low, you had divergences of multiple degrees. You can see here, VIX was lower at these lows than it was even a few days prior. Now, that could have been resolved in a bearish manner by VIX spiking above this level here. And that's something else that was covered in the report last weekend, both in the video and the written report. But this chart to me also presently offers potentially very bullish information because VIX is still relatively elevated. If VIX continues to come in and then it gets below, it gets into this low 20 level and then approaches the 20 level, then you're going to have the S&P, it is very, very likely to easily reach up into this area. So that's what we'll be looking for next week. Guys, do me a favor. If you enjoyed the video, please subscribe to the channel, like the video, hit the notification buzzer bell. And if you have comments or questions, please put them below. I'll be happy to answer them. Enjoy the rest of your weekend. Talk to you soon.